This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the MAYFAIR Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th, Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good afternoon, everyone. Welcome to the Daily Recap. It is Friday, September 4th, and it is the Friday of Labor Day weekend, so I hope everybody's gearing up for a nice, long, fun weekend. Let's talk about Mr. Market this week, because Mr. Market is doing what it should be doing, and I'll get into what that means. Basically, what's happened over the last couple of weeks, and I'm going to flip through a couple of time frames here to give you a sense of the overall. So we look at the weekly, and the weekly basically looks like this. And I talked about this, I believe, in last Friday's Daily Recap. But you have a market that over the last, since October, since we saw those October lows, rallied up, basically, petered out and went into a very narrow sideways consolidation for the better part of the first 6-7 months of the year before just thunderously, if that's even a word, thundering down, all in a matter of, a handful of days, and retesting those October lows, and now it goes into this snapback cycle. So we're now in this, the market has snapped back. We came roaring to the downside, and now we've snapped back. As I go down and we look at more detail in the daily time frame, you can see what that looks like. Here, obviously on a day-to-day level, you get that down move, you get that snapback, and it becomes, whereas we saw these large expanding candlesticks on massive volume, on the downside, it has started to, the bounce came on a declining volume, and now it's starting to peter out. You're starting to see less chaos in a sense of intraday push, whereas most of the directional moves have come via overnight gap. We started this week on a big gap down, and then we, Tuesday, Wednesday, Thursday, rallied back, filled that open gap yesterday on the highs, and the market, again, expanding overnight on a gap down today to the downside. So the market doing its best here, its best tango, if you would, to the downside. So, where does that leave us? Well, that leaves us with, I think the market needs more time. And much like how we kicked off the week with this open gap down, we end the week almost at the same spot. I think we could, again, fill this gap and more time. Again, ultimately, all we're doing here is we're kind of treading water, going sideways over the next couple of days, couple of weeks, as the market builds, energy for what I believe to be more downside. And I've discussed, why I think that and the rationale behind it. As this weekly chart develops, these moving average, both the 8 and the 21 here, EMAs on the weekly, for the first time in a long time, in years, have crossed to the downside as the market now sits sort of in this lower area. I do think the weekly needs more time to develop, maybe even another week or two. And again, it could go sideways. It could go back and forth. But I would expect what I would call hard money. Hard money is non-committed, lack of direction. You might see a red day followed by a green day followed by a red day as the market chops around. And all it's really doing is building time for these moving averages to continue to crawl down. But ultimately, I do see this market breaking lower I think it's just a question of time. We have retraced quite a bit. As fast as we went down is almost as fast as we went up. And that's the natural course of the way things move. When stocks typically, or markets typically move with this kind of speed and excitement, and they go basically vertical down or vertical up, the snapback, at some point when it does find that, that bottom or that short-term bottom or that short-term top relative to the direction, the snapback can be equally as fast. And most of this coming, in just a couple of days. So now the market needs to figure out what it wants to do next. And I do think time is the best, will be the best barometer of that. But overall, I do think this is shaping up to be, more downside to come in a matter of what could be a couple of days, a couple of weeks. But I think it's a waiting game at this point. For those of you that are, trading, there seems to be a little bit more opportunity shorting rallies right now or bounces than there is trying to pick bottoms. And that's across the board. As I look at stocks, even today, and today maybe not a great example due to the nature of this morning's gap down, but banks are starting to show weakness as we look at Goldman. Which is always a good, I think, a good barometer for financials. Certainly, not a lot of buyers stepping in here, whereas in the past, historically, buyers have, been aggressively buying, all these, pullbacks, not quite seeing it the same way here. Many of the oil stocks, which have been beaten up for a long time, saw a little bit of a bounce over the last 2 weeks, but again, we'll need more time to see if that bounce is just another bounce to be sold, or I'm using Exxon here as the example, or again, just, into declining trend lines where, again, the trend resumes. So you got to pick and choose your battles wisely here. I run the off-the-charts subscription product here for T3 Live, and, I tend to lean and be a little more bearish than maybe most. But opportunity to me presents itself visually. We've been in, we're shorting. I've looked at this snapback as opportunity to engage in some trades with limited pockets of risk. Facebook, Google, Amazon, some of the high beta names, Priceline, all are present, I believe, to be opportunities to get involved with trades with limited amounts of risk based on current price action. So, depending on your style and your preference, there's opportunity here. Whether you're a bull or a bear, I think if you're an active trader, is not a great way to view the marketplace. It's are you an opportunist, and if so, what opportunities are you capitalizing on? So, for those of you that understand what I'm talking about, I think it's always a good question to ask yourself. Well, what am I? Am I an uber bull? I just have to be a buyer regardless of what the market does. Am I a bear? I have to be on the short side, or am I an opportunist? Am I going to look for where the risk reward scenarios are the best suited for me? So with that, a little food for thought for the weekend is different ways to think about this for different types of traders and different types of people. But nevertheless, my job is to get you to think. And with that, I want everybody to have a wonderful, happy and healthy and safe and fun weekend. And we'll talk to you next week. Enjoy.